And everyone, Mike over at Charts Don't Lie. I hope 2015 is off to a great start for you. I wanted to point a couple of things out in today's video that remind me a little bit of the beginning of last year. Seeing some similar action out of coffee and, of course, gold and silver and the miners. And I'll get to those in a minute here. But as you can see, here's a weekly chart of coffee. Coffee had been in a steep downtrend for a while. It had broken out in the beginning of last year and then just rocketed higher for the first quarter, almost doubling in a very short time frame. But after the first quarter, coffee basically just traded between 160 and 220 for the rest of the year. It didn't really go anywhere. This looks like it's been digesting the moves for a while, and we could see some more interesting action out of coffee. Now, I had pointed this out a few days ago that on a daily chart, coffee had pulled back to that 1160 key area from June, and it was in this nice, tight, bullish falling wedge. And as you can see from that post, coffee's up about 18% 4 or 5 days. It's up about 23% off the bottoms. Now, the reason I bring this back up isn't to gloat on this particular trade, but to point out that last year when we had this big move higher, we got a secondary entry from the initial breakout in this nice flag after it already moved from 1113 up to 1143, which had been about a 30% move in 5 days. So pay attention to this over the next week or so. Perhaps we'll see some consolidation and a nice little setup that might give us a chance to get back into this once again. Now, on silver and gold side of things, I wanted to take a look on a monthly basis. I wanted to point out the monthly chart of silver. We're still obviously in this downtrend from the height of the market, but silver is pressing up right against that downtrend line that has acted as resistance for the last few years. What silver does over the next week or two is going to be very key for the sector. Now, gold, on the other hand, very interesting on a monthly basis. The larger downtrend line drawn through the two highs does run this up into the 1400s. I'm not talking about gold going back up there yet. What I'm more interested in taking a look at is the secondary downtrend line from 2012 through where gold kind of fell in June. For the first time in 2 years, we have closed above that as of this afternoon's close. Now, the other line that's on the chart is this 1180 area. The 1180 area has been key for a number of years. You see the first time gold ran up into it, it did poke through, kind of a false breakout, was immediately rejected, then kind of regained some strength, and then attacked it again, broke through, then back tested it, and then really took off from there. And in 2013, gold came right back down to that 1180 key area, bounced off of it real sharply, real quickly, then came back down, tested it one more time, and then earlier in 2014, or towards the end of 2014, it broke down underneath this 1130 area. Now, that was when all of the bears were jumping for joy, talking about how gold was going down to $800, $700 an ounce, and the bottom was going to fall out of the market. That didn't happen. What ended up happening over the next 2 months is gold immediately bounced back pretty strong. I mean, off of this low, gold's up 10, 11%. And for the first time, we are over this weekly important area of resistance. We finally closed over it, first time since 2012. So very key to watch what gold and silver do in the beginning of next week. If gold can stay above this line, we could really see the miners start to take off. Now, the miners have had a lot of interesting looks to them over the last week or two. Now, if I pull up a weekly chart of GDX, we can go all the way back here. We can see the low from the 2008, put this right around $16. That is an area that we did test a month or two back. Now, GDX had basically been trading in what most people thought was a year-long consolidation before the move higher. A lot of people were thinking that the miners were going to break out at some point last year. And we had this nice, like, year-and-a-half long consolidation. But then right along with gold, we had that breakdown. And GDX went, instead of trading between that $20 and $30 range, now fell into this $16 to $20 range. Now, if I zoom in, you can see for the first time since this breakdown, which in gold is starting to look like it might have been a false breakdown, GDX is back over that key $20 area. The other thing that's very important to take a look at is the weekly close over the 10-week moving average. This green line here on the screen is the 10-week moving average. We've now closed over it for 2 consecutive weeks. When we look back at this chart, anytime that we've closed over this line for 2 consecutive weeks has been large moves. So here was the January 2014 move. When we got these 2 closes over here, here was the June move. And we got 2 closes over the 10-week moving average. We also had a move in 2013. Now, when I pull up the junior miners, I'm going to pull this up on a daily basis first. This is the reason I picked up JNUG at $26. We had this downtrend line at the end of 2013 and the beginning of 2014. When we broke over it, that sparked the junior miners run. Then we had another downtrend area that took place from April to June. When we broke out above that, there was the next junior miner run. Well, 5 days ago, we did break out of this once again, and I picked up my JNUG shares from 26. I'm still swinging those because I think we're going to have a bigger run. Now, if I look at it on a weekly basis, the junior miners, anytime they got over their 10-week moving average, once again, they took off. So here's 2 weekly closes over the 10-week moving average, 40% move. Here's 2 closes over the 10-week moving average. Here's a 24% move. Well, we are now over the 10-week moving average. We're over it by a good margin here. I think we're going to go ahead and see some more upside as long as gold and silver don't give it back right here and can actually stay over this key downtrend line going back all the way to 2012. Well, good luck to y'all. Have yourself a great weekend, and hope 2015 continues to treat you well. Take care.